From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
Ladies and gentlemen, this is Adrian Zduńczyk, CMT Charter Market Technician, and I'm your host for today's episode of the Nest Show podcast. And as always, we bring the highest quality legends, people, VIP from the scene of trading, of crypto trading, of equity trading, of stock traders, stock trading, as well as the indices, and so many more of the spaces of the financial markets that we're going to try and delve actually into the deepest corners and the secrets with today's guest, the legend himself, the guy whose beard is unmatched, the person who I truly admire for his incredible achievements and very sound analysis. And I'm talking obviously about Michael Nauss, CMT, my friend. How's it going, Michael?
It's going fantastic. I don't think I can take the beard crown with you around, my friend. Right? You've got more of the side going on. I know that's a little bit harder, so I'll get a good second place in the beard game. I'll take that.
Oh man, no way. Listen, at least you have a hairline on top, right? There's you're the whole run higher.
For now, let's knock on wood for that one. Could be any day now, I guess.
Yeah. No, it doesn't seem like it's going anywhere, man. Sorry. How you've been? Like, how's it been since we last saw each other half a year ago, man?
I know it's been it was New York, the 50th anniversary of the CMT. Yeah, that was a great time. Things have been great. We're in a bull market now. That obviously makes everyone a little bit more happier. Both crypto and the equity markets are doing well and recovering. So that's good. For life things, not really too much change. I got another baby on the way. I guess that's some big news.
Congratulations.
I don't know if I've chatted with you on that, but that's very exciting. That's why the baldness actually might kick in as soon as I have to deal with two.
Oh man, is that a boy or a girl?
Girl. So we got one of each now. Yeah. So
congratulations. What's the name?
Much, not there yet. We haven't figured. Me and the wife are still fighting on that, but we'll get close. I'm sure by the due day, I'm sure we'll have something figured out. Hopefully.
If not, we'll just put like happy wife, happy life. Yeah.
Yeah, she'll probably end up getting away.
Happy life.
To be honest.
That's what it is, man. Listen, we have no other choice. We have to accept the reality, right?
Exactly.
And then speaking of accepting reality, you've touched upon, the bull market thing, which is, it seems, so much understated, so much underappreciated still. Again, I might be wrong. I may be I may be a victim of some small sample, if you will, analysis. Still, I see some let's call it leftover opinion, from the last year, from 2022 frames, from the bear market, midterm bear market, midterm elections. The things have changed, it seems. However, people don't seem to have changed, at least not all of them. What's your take on that? How is it looking on your end, Mike?
I don't see a reason to not be bullish, right? Technically, I'd say the bull market's a year old, right? We're talking last October. We had that crazy CPI bottom in stocks. I think what you see a lot of, and this is a recent revelation that I've come across, is that we know, because we're studied in the CMT, about recency bias, right? So, you are anchored to what's happened most recently in thought, and you add that with the churn of the trading community as a whole. We know a lot of traders and a lot of investors won't make it and they go back to other things. So what you get is this rolling window of people who've kind of just started their trading career in the last couple of years. So I remember in 2021, 2022, people being shocked that every dip we weren't just screaming to new highs, because in 2019, 2020-ish area, that's the market we were in. And now that we are in a really strong market, it's like, okay, now people are stuck to this old 2022, bear market zone. So it's good for us because we can use these as kind of inverse sentiment indicators, I guess. Eventually, I know that when I go on Twitter and I see no one bearish anymore, that's when it's probably time to sell and move to the sidelines and wait. But I think we're a long way. I think there's a lot of people that are behind the curve and are just going to keep buying, paying up more and more as things move higher. You're muted there, buddy.
Oh man, there you go. I'm crazy. I'm crazy today. Thanks for stepping in case
No
I
worries.
pass out, in case, you know, when we were hosting the free trading congress, you know, past days,
Yeah.
I was in Dubai. I was in a hotel. We got a fucking fire alarm in a hotel and right in the opening show, bro. Like you cannot make it
Oh
up, right?
no.
Yeah, I'm pretty much, you know, used to screwing up things. Anyway,
Fine.
what I was saying is that, you know, crypto is just one of those, you know, a very strongly asymmetric, you know, opportunity cost, if you will, right, for missing out. And I perfectly agree, couldn't agree more in terms of, you know, being, you know, relying on the contrary opinion. And the contrarians, you know, typically do well with some probably less volatile less volatile option picks, you know, stocks up there. I've seen, you know, many people kind of like take extremely bearish stance just based on the overbought, you know, sentiment, if you will. And that was in $20,000 back before Bitcoin rallied to almost 70.
Mm-hmm.
So there's a little bit of a trap of relying too much of the contrary indicator and taking it as a first and foremost strategy. Isn't that right? What do you think?
Yeah, well, and if you're, you know, let's just use RSI. I think that's probably the most common overbought, oversold indicator. As a quant, so just the way I view trading is first I have to prove it to myself, right? So I have to do some sort of testing on whatever indicator or trading pattern or style I'm going to apply, and then I trade with those statistics. That's why, you know, my website is Stats Edge Trading, because I try to make sure I have that edge on it. And I've done the testing in both the equity markets and a little bit in the crypto markets of doing the exact opposite of that. So instead of buying when the RSI gets oversold, which is the way you'll see on most, you know, campy YouTube videos and websites, you actually buy as soon as we get overbought. And that outperforms, especially in the crypto market, where you're right. When you have these trends, they become monster trends. You are way better off buying when that RSI or Williams percent or whatever or oscillator you use, when that hits overbought, that's usually a better time to be going. And then when it hits oversold, you know, a lot of people start buying. That's probably usually the time, Lisa, to lock in some profits anyway.
Yeah, man, I got you. I mean, so, you know, there's a lot of, let's say, range trading, right? Like for everybody who's watching, you know, who's just tuned in, the very basic approach, you know, for picking up the trading systems, categories, strategies, if you will, to an extent, is to dissect and differentiate between the trend following, between the mean reversion / range trading, as well as the chart pattern recognition, some external signals like relying on the CPI prints and, you know, the whatever unemployment data and so on. Still, it is mainly dependent, at least the cases that you see most often, is the trend following or range trading. Most of the traders typically follow the higher probability game, right? So we as people, naturally, we love to be right about things. We hate being wrong about things, right? This is why most of the time we would naturally go for the mean reversion and range trading, because most of the time the prices are going channeled, you know, sideways, and you're gonna chop, you know, between those support and resistance levels. And you have all those people coming in with this, you know, heuristics of learned behaviors, buy the support, sell the resistance, and it populates and it happens. However, isn't it actually fact and true that it's the biggest amount of money stays and relies in those major trends that break out to the upside or to the downside?
Yes, so I spent about 10 years in the hedge fund space, and what I did there was a lot of this was around the Bernie Madoff 2008 time. So I was an external kind of auditor, I guess, on hedge funds. As someone with a trading background, they wanted to send me in and have me talk to the traders and say, "Do you actually trade?" Right? Because Bernie Madoff blew up, and it turned out he wasn't actually doing any trading. What I found a lot of the time is exactly what you're saying, is that a lot of the funds who wanted a really high win rate and were really, really concerned with being right all the time were always trying to pick tops and pick bottoms. And those guys didn't seem to last very long. The harder thing to do, in my opinion, but the correct thing to do, is trend trading, right? So it's identifying the trend and it's hopping in the trend. The problem with that is, generally speaking, your win rate is is really bad, sometimes less than 50-50. Often with pure trend followers. Trying to remember, what was the turtle we saw speak at the CMT. Remember?
Oh man, blur memory.
Okay, I was actually in a Twitter space, I think, listening to him this morning. Jerry Parker. There we go. I just scrolled my
Okay.
Twitter timeline. Yeah, Jerry Parker was a very successful trend follower, multi-billion-dollar hedge fund, and he trend follows a whole bunch of assets. And their strategy, I believe, is like a 35% win rate. So if you are trend following, the problem is you have to be okay with being stopped out a lot and manage risk. But to use the word asymmetric again, that's what we're trying to do, right? If we can get into something that we know we have 10 times our risk, if we're right, then it's okay that we got stopped out maybe 3 or 4 times to get that trade, because when it really happens. But it becomes very hard psychologically for a lot of people, because you have to be wrong frequently. And then also, not only do you have to be wrong frequently, what I think is harder for people is you got to hold on when you're right. And I think that's really, really hard for a lot of people, to be in a trend and to do nothing. We are taught a lot in all of our other aspects of life that it's the more active you are. The more times you go to the gym, the better shape you are. The more studying you do, the more reading you do, the more intelligent you'll become overall. But trading is a lot of, you hit the button and then you do nothing for very long periods of time. I really think that is the hardest part of trend trading for most people.
Oh man, right. And I couldn't agree more. And speaking of all those gyms, it is true, unless you go to the gym where, there are often those memes flying and floating all over the internet. And the first time you go to a gym somewhere, imagine you're a first timer, right? You literally go for the first time ever to a gym, and you look outside and there are all those crazy folks just, hanging down the machine, just like
Yeah, I've
twirling,
seen
just
those. Yeah.
moving on the bench, just throwing all those crazy, those
Yeah.
crazy folks, right? So it's funny for everybody who's joining for the first time, because at the end of the day, everybody comes in with expectation of money, of expectation of earnings, right, rather than expectations of losses, right? And that translates to this a lot of confidence building, especially when we get to win, when we flip the coin 10 times and around and lands heads. We think that we're the best coin flippers in humankind history. Well, as a matter of fact, we just got lucky. So, mistaking luck for skill is probably one of the deadliest mistakes, and which is why we have legends for everybody watching and listening, like Michael Nauss, CMT, who's actually here to talk to us also about the numbers. So, not opinions, numbers, not just returns, risk. And the risk can be quantified, and it can be quantified with the help of technical analysis. What have you got in store for us today, Mike?
Well, yeah, just a quick note on what you're talking about there. I just looked up a book that I'm listening to currently. Tom Hogard is the name for
Okay.
any of the listeners. Name of the book is Best Loser Wins, and it's a great overall trading book, because the idea is just what you were talking about. Whoever has the ability to talk about risk and to manage risk at the end of the day is going to be the winner. Because as you were saying, anyone can go on the internet and say, I made $10,000 or $100,000, whatever, on this trade. But yeah, the numbers of what is actually the system and what you were risking. Someone comes to me and says, I made 10 grand in a trade. That means nothing to me, right? If you risked 50,000 on that trade, then that's a bad trade. If you risked $1,000 on that trade, that was an amazing trade, right? It's like that other side of the equation that a lot of people don't end up talking about. But
There's real quick. There is this, Jesus Christ. There are so many memes. So for everybody, I spoke with Mike, and we kind of like, we made this unwritten agreement, that it's gonna be a super chill, episode that we just don't get too stiff today. So I'm gonna bring in some memes occasionally. One was that there was this popular, I think one of the influencers was sharing. Here's I made 5 million today. Like here's how I'm gonna teach you step by step. Step 1: borrow 20 million, right? and and then you are at 5 million later, right? So that's this recipe.
Well, that was
Sorry,
an old.
man.
I think it was John. I don't know if you ever saw that legendary episode when Jon Stewart had Jim Cramer on. That's now you got to go back for that. That was 2007, I think 2008, during the financial collapse. And right to his face, which was great, Jon Stewart looked at Cramer and said, "Hey, do you know how do you make $100 million, or how do you make $1 million?" And Jim Cramer said, how he's like, oh, well, you start with 100 million, you listen to CNBC, right to the guy's face. And I thought it was absolutely hilarious. Big studio. It was back when he was on the Daily Show, right? So a big studio audience and everyone's roaring, and
love it.
It was fantastic.
Big balls, man. So what have you got in charts for us?
Yeah, I can. Do I switch over here? Do you switch over? I got some charts. So one exercise I've been doing that I think is kind of interesting here, and I'd love your feedback, because definitely when it comes to crypto trading, you're gonna be the master over me for sure. As a data guy, I'm starting to build some back tests and some models with crypto. Hard part is the data. Most of the back tests I run, I can show you one here. Most of the back tests I run, I want to make sure that they're like, this one's from 1980 to date. So I like to have a lot of data, and there's just less of that when it comes to crypto so far. So I have to get comfortable a little bit with that. But what I've been doing a lot of, and this is very interesting, as my friend, I was actually reading this, Brian Shannon, I'm sure you've heard of. It's a great CMT.
Yeah, I'm in talks with Brian as well. Such a legend.
Good. Yeah, it's close. I don't know if you got, but I got a signed copy.
I need to get me a signed one. I need to get me signed one, man.
I don't know if you just while I'm bragging, I don't know if you noticed, I'm way in the back, but I actually have I'm in the back. Oh, I'm before David Keller, so I'll take that. But yeah, I got a little very back there.
Oh man, I need to get your signature on my book one time.
Absolutely.
Yeah.
So what I've been doing,
Ethereum is looking interesting, isn't it?
Yeah. So what I did is I started with Bitcoin. And I noticed that Bitcoin. This is should change the color on this, but this is actually the anchored VWAP from a long time ago. So for any of your listeners who don't know, VWAP is essentially the average price of the market. So it takes price and it combines it by volume. So what this line is basically representing is, say you started to get involved in Bitcoin at the worst possible time, right? The all-time highs. You started to dollar cost average on a weekly basis or a monthly basis into Bitcoin at all-time highs. This is the average price of what that occurs. So to me, it does a lot of things. I have a couple algorithms that run against it. Like I talked about, I've done the math behind this. If you are above these anchored VWAPs from all-time highs, you're better off statistically than if you're below them. If you're above the year-to-date anchored VWAP, you're better off than if you're below it, things like that. But it's representing this average price. And Bitcoin, you can see we've rocketed through that average price a long time ago. That was like 30,000. Took us a couple tries, but we got through it. So for me, that's become my benchmark. So when I'm going through cryptos now, what I want to see is, if you're not above that, then I'm not super interested, because there's a lot of things. I saw you on Twitter, you made a tweet, I think it was about Matic, right? This Bitcoin's an uptrend, Matic's a downtrend. I thought that was a great tweet. And a lot of them, they end up being the same, like Dogecoin. You've got a 3x before you're at this anchored VWAP from the all-time highs. Like Pepe coin, right? You're still, I don't even think this one draws, but you still have a while. But there's two that are really interesting. So one is Solana, which you're now above that, and just see how perfectly this thing acted as resistance right here. And we saw it on Bitcoin. It had a hard time getting through it, but Solana is through that, and now it's consolidating sideways. So for me, these are the ones that I want to look at. So as I go through the crypto, I just want to check these out. And Ethereum kind of, to me, looks like Bitcoin did back in this area, where it was fighting it and it was struggling with it. And the same. So this is the same anchored VWAP from all-time highs. You can see it was, it's been clear resistance about 3 times here. Every time, well, it's a different arrow, but that's fine. Every time we hit it, we just fell apart right away. So we hit it here at 3,400, and then we fell to 11,000. We hit it again at 2,000, and we fell a bit, and so on and so forth. This is the first time now we're 4 weeks, almost a month in a row. To me, and I'd love your feedback on this, this looks like something that is digesting or eating through upside supply. And if we can get through here as being the other major crypto that a lot of people know and can invest in different ETFs and things like that, I'm wondering, and I'm betting, and this is what I want your feedback on, is, are we going to get a catch-up trade where we end up meeting or getting to this move that we had in Bitcoin, which for me looks like it's around 2,500 or so. And if I'm wrong, I'll be back out at 18, right? So I'm risking a little bit, but so what do you think of that? Do you think we're in a catch-up trade in Ethereum?
Well, first of all, I love your analysis, man. I mean, you're such a sound guy and professional in this
Appreciate that.
in this space. And you know what I would say is that Ethereum is this lagging very often behind Bitcoin, mainly, and it depends on the cycle phase, right? So what I've noticed, again, I mean, everybody take it with a grain of salt. No one knows the future, and so on, all the disclosures. What I've noticed, right or wrong, is that for most of the part, it's in the early stages of the bull market reversal. Still, you know, to an extent, apparently judging by the sentiment, by still so many biases present, cognitive dissonance, designing the reality, there are still people calling it the bear market, right? So if there are still people, and let's say believers into the bear market when Bitcoin made, you know, 130% of a stretch of 11 months or so, this tells me we're probably not fully kind of like into converted bull market that is like, okay, it is a bull market, like not a single piece of doubt, right? So typically what happens,
No,
so typically what happens is that you would have Bitcoin sucking in all the available liquidity in the market, right? Which is where the dominance of Bitcoin kind of like spikes. And it's like, you know, 50, 60, 70% of Bitcoin dominance that you know, occasionally just spikes there because the liquidity conditions are, you know, on the macro finance side are still kind of like limited. You know, there are still high interest rates. There's still not much money, not much cash in the market, into circulation. And compared with, let's say, 2020 or 2021, right, which is a highly established benchmark right there. So typically when early stages of the bull market come in, you know, right before the easier policy comes in, you get to see more allocation and more attribution towards Bitcoin because simply it's the most liquid. So those biggest whales that come in, those institutions, right? They come in and they seek for the liquidity. They seek the most liquid assets, so they seek for Bitcoin. Ethereum is okay, right? Though it's not Bitcoin, right? There's crypto equals Bitcoin to them to an extent, and it's prejudice. It's fine. However, that's what they typically think. So it takes time. I often explain it like you imagine a glass of milk, right, or a bottle of milk is this container with the market money, the liquidity. So if you pour it on the table, right, it takes time until it spreads across the table evenly. So it's like it takes time until this all money that's supposed to come into crypto spreads among those altcoins, let's say other altcoins. Which is why I would expect that the biggest attraction in the early stages, when the bull market is just waking up, when all those people are still left behind, the institutions are joining, people are slowly realizing that something is off about their wrong bear market principles, then Bitcoin is the runner and everything else kind of like mostly stays behind, right? So just a quick point, because you asked about the question. Yesterday I showed a chart of the total crypto market capitalization of altcoins, right? So total crypto cap minus Bitcoin. And while Bitcoin, since August 2022, when there was the peak of the bear market rally, right? There's the one for Ethereum. It's going to be after July. It's going to be the peak close to 2,000, like 950 or so, right? Right, what do you have in the chart? So if you take this as a point of reference, right, this bear market rally peak for Bitcoin and for altcoins as a total market cap, you see that Bitcoin since then has performed 57% to the upside, has run 57% to the upside, or 60%, let's call it, right? While altcoins are 4% below, right? So there is 65 percentage points of difference in terms of the Bitcoin leadership, right? So it's clear that altcoins are still, you know, months behind Bitcoin, that Bitcoin stocks in most of the liquidity. That's what it seems. I mean, Ethereum is looking good though.
Well, this is why, so this reminds me, and it's very interesting, as someone who did some work in the, In crypto terms, it was a long time ago, but I worked for an Ethereum miner, and we were going to be a custodian and a trading entity. They want to do like the Goldman Sachs of crypto. And again, 2018, that's in crypto time. That's an ancient dinosaur since I've been in it. But what I noticed, that's for me, that was my intro to crypto. And when I started studying and all of this, what I noticed was, let's actually go to a monthly chart. It mirrors, and this I think is the proof behind technical analysis as a whole. Um, but it to me proves the adage that all of these markets, they work the same because they're kind of bridged off human beings. So um, I think we're aligned on this, and this was the same kind of thing that we notice in different markets. So if you look at the S&P 500, we have on the top, this is your big cap guys, the Metas and Apples and all of that. Then the IWM below, this is your small cap guys. So we had S&P 500 break out to new highs here, and then if you look at IWM, it didn't break out till much later. And then in 2020, you had a new high breakout here, and then you have a small cap breakout right here. Now it looks like we're close to a big cap breakout here, and again, lagging as it normally does is the IWM. So this was my idea with approaching cryptos this way as well, is that if you look at Bitcoin as the large cap, right, as you said, the one that everyone knows, if we took someone who had no idea about the stock market and they were interested in investing, you say, okay, well, what names do you want to invest in? They would probably say Apple and Microsoft and all of they're going to stick with the names they know and they understand, and all of that type of thing. But what happens in bear markets in equities is that you really have to look for the strongest names because they're the only ones that are going to survive. And it's the same with bear markets in crypto. We know a lot of these altcoins are probably never coming back to all-time highs and things like this.
Relative
But
strength, yeah.
yeah, relative strength, and it works the same in cryptos. I've noticed as it works in FX and works in futures and in all markets. And on the way up, what you do is you get a lot of in bear markets, it's like the market is pulling everything down, and the things you want to buy are the things that it can't pull down at all. In bull markets, you kind of get the opposite effect, where at least in the equity world, where it will pull up stocks that may not be considered great at the time. Like we could go to a chart of Peloton, right? There was no reason for Peloton to be bigger. I think it was bigger than like ExxonMobil or something at some point. It was insane. And that is kind of the way, at least for now, I'm looking at and I'm approaching crypto markets as saying, okay, we're seeing this big push from Bitcoin. And for me, it has all the signs of a new bull market rally and a new cycle. I see no reason why over time it's not going to get to that new high and maybe make a new high. We can chat about this later, but I'm of the opinion that I think the more institutional involvement, the slower it's going to move. So I think it's going to require more patience over time from now on. But I do see this catch-up trade making sense where, as you talked about, everyone knows Bitcoin. So I think that's going to be the gateway into crypto. But what happens, the reason why I think this phenomenon happens, that in bull markets, laggards catch up, is because in bear markets, you're selling stuff and you're raising cash because you're afraid it's a bear market. In bull markets, you're selling stuff and then you want to buy more things, right? If you think Bitcoin's maybe a little overdone, and say we get to Bitcoin 70, 80,000 and you're taking profits in Bitcoin, I don't think that money leaves the crypto space as easily, right? I think you see it's like, okay, well, I'm sold some of my Bitcoin, but now let me go shopping. And they see that maybe, right, Ethereum or Solana or Helium is one that's looking interesting as well. These ones haven't quite broken out yet, and so the money funnels down. Where in bear markets, it's give me my money, let me turn it into cash, and bury it in my backyard because I think the world's going to come to an end. So that's my theory about why I think that we get, and I've noticed the same thing that you were talking about, this kind of phase one is the big one, right? Is Bitcoin or the S&P 500 in this case, and then kind of phase two is all the other stuff you can catch after that. So what do you think of that? Before I do have another question to ask you.
You ask me.
Oh, I'm gonna pick. If I've got a crypto expert here, I'm definitely
crypto expert. Mike,
brain.
don't forget it's me interviewing you, not you. Bro, easy. Okay, I got you. Listen, I mean, I think that makes all the sense in the world, and directly translates, for the mechanisms for what you mentioned, for the Russell 2000 and S&P 500, similar stuff to Bitcoin and the other altcoins, literally, right? So, like you're showing, the Ethereum chart, and when you compare it with Bitcoin, there's obviously clear runner versus laggard, right? Mm-hmm. The actual leader versus laggard, and the distance, the price travel distance is actually significant, right? This is going to be like, again, 50% or so, right? There's a lot of outperformance, 40-50% at times. So again, momentum investing, which is something that I truly understood and appreciated a lot when studying for the CMT and so on, basically suggests it is an up minus down kind of like a model. So it suggests long strength and short weakness, mm-hmm. not the other way around, right? You don't buy something just because it's undervalued, because what if it drops another 50%? You know what I'm saying? So it is, especially in such high volatile assets like crypto, that I've seen so many cryptos being 90% down literally go to zero, right? That if you committed to buying just because it was oversold in the momentum or so, the trends, this bandwagon, those behavioral biases are so strong that it's impossible almost to tame it at times. And well, guess what? There is no cash flows. There is no companies often in the truly decentralized projects kind of like behind this, right? So funny thing is, when I speak to institutions, when I advise the hedge funds and so on, I was in this what was it, Global Wealth Conference in London City, where all those trillionaires sit. Basically there's a lot of money sitting in one room. There were a couple trillion dollars represented by 200 people, I think. All right, so there are a lot of money in the room. And I was there asking, hey, why don't you invest in Bitcoin? Why are you not investing in Bitcoin? And typically there was three categories of the responses that I got. Is one, that it's a scam, right? Another one, that it's that they could do something with it, although they have no one to guide them, right? So they need this reliable voice of reason that at the moment I'm trying to be for them. Mm-hmm. And the third one was that they didn't need it, because, well, there is this diminishing marginal utility law in economics that basically the more money you have, the more risk averse you become. The concave curve there is, right? Because when you have 5 trillion, you don't need 10x. You don't need the most volatile asset in the world. You don't need 50x. You need 5% consistently every year, for instance, mm-hmm. right? And the capitalization, on that is capitalizing on that just basically generates enough of money. So there is a variety of those that. Have you read the article, by the way, that I sent you, the Bitcoin seasonality article with Jeff? Yes. Right. Amazing. So I mentioned. Yeah. Oh, thank you. Yeah. So what I'm referring to it because that's what I call the institutional bias, right? Mm-hmm. So at the end of the day, I used to think that the institutions, this is such a magical term. This is like, institution. It's exquisite. It's something abnormal. It's supernatural. Well, as a matter of fact, institutions are people. Those are the same people just agreeing to do something. The institution is a contractual obligation. It's an agreement, right? Mm-hmm. To execute whatever transaction. So the institutions are literally people, and the top of the shelf, the top of the funds, the top of the people, of the biggest funds and the biggest banks in the world, sit the people who fall for exactly the same biases, like this 15-year-old guy just flipping a coin, right? And they say because Bitcoin doesn't have cash flow, doesn't generate cash flow, doesn't produce, financial statements every quarter, that it's worthless because it doesn't fit in the stock market model that they know. And with Bitcoin, with cryptos, the most aggressive part is the opportunity cost, because by trying to fit Bitcoin in those, different stock market model terms that do not really match Bitcoin, right? Instead of taking it as a completely something new, you basically expose yourself to missing rallies like 9,000%, like 3,000%, like 700%, And those are repetitive rallies that, follow similar formulas. And where I'm going with it, Mike, is that it's actually, that's the most beautiful point of crypto, that it's purely technical, right? Like,
I love that.
again, just take it with a grain of salt. Like 90%, of that is technical. Like there is no financial statement, so there is no trading days, the news trading kind of like events on that days, right? There is no intrinsic value in the traditional state of traditional, discounted cash flows model accounting, whatever, doesn't matter. There's no this. It's literally the law of supply and demand in action, and behavioral psychology, behavioral finance to it. So it's all those biases that really make crypto so asymmetric, so geometrically growing, and so geometrically falling as well, right? So all it takes is probably to close your eyes and just ignore Bitcoin for a year, and you've already missed out like 200% or 300% of growth on your account. So that's the craziest part, man. And that's something that I'm doing my best to kind of like, just educate all those people, all those institutions. 2 days ago, I presented a keynote about the Bitcoin seasonality and the CBDC smart contracts in front of the banking sector in Poland. There was some interest, although it's like, it's like, take it easy, take it easy.
But it takes them a while, and right, I believe we're going to see more of it. I think voices like yours will certainly help. I think a lot of the problem is that the news surrounding crypto is generally not good, with this exchange shutting down, and this CEO being fired, and this CEO committing fraud, and all these things. But again, as someone who's studied markets, and when I started to work in the crypto space, I realized that it's all the same stuff. It just, crypto's moving faster. Like if you go back to the .com bubbles, there was the same thing. There was companies that had no value. There was CEOs that were getting fired. There was frauds, and most of those .com companies don't exist anymore. But if you stuck with the strong ones, like you were talking about, you stuck with the ones that didn't go to zero, you didn't wait for them to go to zero, you bought them on strength, then you would be holding Apple and Microsoft and Amazon and all these things that work really well. My theory on why more institutional involvement will actually lead to less volatility is because what I see happening first, and again, feedback on this, of course, right? Because I'm always just doing these mental experiments. But what I see happening first is that a lot of hedge fund managers and investment advisors and all this stuff are going to say, hey, take 2% of your net worth and put it in crypto. And everyone looks at that and says, well, if everyone takes 2% of their net worth and put it in crypto, it's going to cause this massive boom. But what they don't understand is that also means that they're going to rebalance that frequently. So say I'm a large multi-billion-dollar hedge fund, and I'm just diversified long only. So I own some equities, I own some international equities, I own some currencies, some futures, and now I own like 2 or 5% of my portfolio in Bitcoin. Looking for uncorrelated assets to diversify. Well, that means that when you get these triples and quadruples, which will happen for sure in crypto, by mandate, I have to sell, because I need to keep that 5%, that 5% allocation. And then it also means that if crypto drops, then now I'm a guaranteed buyer. And you noticed it a lot in the equity space over time. The more ETFs got made, and the more people just take their 401ks and just dump it into the market, the crashes just kind of disappeared. Like these massive 1987 Black Friday crazy crashes, they just went away. And I think, and this is just pure speculation, right, out of my arse from this one, but I think we're going to start seeing the same thing, where if you have these institutions with these allocations, it's going to mean that the sell-offs are going to be way less dramatic, which I think is good for investors. But I think the rallies are going to be a little less dramatic, which is good for investors, which is not as good for investors. But I think it's going to make it an even better trading asset, because it means that timing, sticking with the trend, but timing moments when pullbacks are occurring to get into trends, and timing moments where maybe it's a little overdone to take a little bit off the table. I think these moves, it's going to be less of what we saw, I guess, even back here, where you have just these insane runs, because what I think is going to happen is that when that monthly rebalance occurs, you're going to have some forced selling that's going to come into the market, which again is, for people who are following channels like this, I think it's going to be even better, because it means you're going to be able to get more opportunities to trade. You're going to get more opportunities to get in and out. There's going to be more shorter term volatility, but less longer term volatility. That makes sense?
Yeah, man, it does. So funny thing is that the funds, for most of the part are pretty much illiquid, right? Not only they charge you, a lot pretty much for, withdrawals, for, the management fees, of course, and so on. It's actually quite illiquid. When you want to get money in one, they're not going to let you do it, right? At times you need to wait a whole year until you can unlock your money in some crazy stuff, and this may be a funny fact, because I'm not even sure I told you about. I'm working closely on the relationship, and they're my friends at Nomad Fulcrum. Hold on, let me. I'll try to highlight some Twitter profile later towards the end of the show. Nomad Fulcrum. So this is again, full disclosure. I'm partnered with them. I'm invested with them. I invested my money in the equity. And we are working and collaborating together to put out some actual good stuff, also on the prop desk basis, which is pretty cool. So we're going to be helping them gain a little bit of voice in the coming weeks and months. And they actually solve the problem of this illiquidity because they are tokenized, right? There's this whole trend of RWAs, like this real world assets tokenization. So you legally can, fully regulated manner, can create a hedge fund that operates like a typical hedge fund, let's say on the generating, the return side, they makes whatever trend following strategies, a lot of, ultra liquid assets, like the currencies, the euro, dollar, and so on, and also cryptocurrencies to an extent. However, their inflation resistance, they always return, the inflation plus the gain. What matters is why I'm mentioning this is that things like this, right? This tokenized hedge fund, when it's tokenized, it means you have a token, you have control, you have custody over it, right? So you can literally swap the token and get your money out of the hedge fund immediately, right? And they're not going to charge you for it because it's a it's a token, it's liquid. So what I mean is there is this rising trend. This is again the information I wanted to share with a little bit of a context, that with those tokenized assets, those real world assets that are tokenized, that might be literally, again, speculation, might be one of the leading pathways for crypto in the coming 2-3 years to onboard all of those institutions. Because first of all, there are regulations. There's no excuse anymore that there are no regulations. Like it's already happened, or it's in the process of getting the final regulations. And those RWAs, tokenized assets, like you can tokenize the real estate, you can tokenize cars, whatever you want to tokenize, you can put it in the tokens and make it liquid. So you take the illiquid stuff and make it liquid, right? So that might be literally a pathway to take all those institutions, all those fat big players, and put them into market, because it solves the illiquidity problem. You know what I mean? So the things like this can become an actual accelerator to onboard those big institutions. And I perfectly agree, Mike, that in terms of, stabilizing the market, the bigger the track is with the bigger load inside, the harder and more difficult it is to change the trajectory of it, if you know what I mean. Right? It's like the second Newtonian dynamics law. It's like when you put a force to an object, it starts moving, it accelerates. Right? When you take away the force, it starts to decelerate. Right? However, it's not an immediate click. It takes time. There's this whole inertia, just like with the market. So the bigger the market is, think of the mass as a market cap of a market, and think of the velocity as an actual velocity of the market, if you will. So the bigger the market cap, the bigger the velocity of it in terms of movement, the harder it is to stop it, right? And trying to trade against those massive trends is like trying to literally stand in the middle of a highway and try to stop the right big speeding track with your body weight. You know what I mean?
Yeah, if I say this all the time, if I had every dollar back that I ever lost by trying to pick a top or a bottom in a stock, I'd be retired, right? Especially early on in my career, it's funny because you hear it so much, but I think one of the most dangerous sayings in all of investing is the buy low, sell high thing. I think it's like,
bro, biggest scam.
yeah, if we could just reprogram everyone just to say, like look at some of the like these meme stocks. I always go to perfect examples, right? I can't even bring up Bed Bath and Beyond anymore because it's gone. Right? This AMC, look at this chart. It's
Show we work.
yeah, that's gone too, right? There's all these and the issue is, so I just finished reading because I'm a giant nerd, but this giant study that was done across like 65,000 stocks in the US over like 30 years. And they found that 60% of them don't outperform just basically buying and holding treasury bonds. Right? 60% of all stocks in the market just don't. You're better off putting your money in cash in your checking account. And that really highlights the need and the focus on identifying these trends and then getting involved in them, even if it's painful. I spoke to a couple of my followers the other day when I was talking about crypto, and they keep saying, oh, because I talked about, I am, in my trading account, I'm long a lot of Bitcoin from around this 30,000 break. The third time through the AV I'm like, this has got to go. And a lot of them are saying, oh, I missed it. When's it going to pull back to 30,000? I'm like, could be tomorrow, could be never. I have no idea. But B, if it does, you probably don't want it anymore, right? Because it means this entire massive 10,000 point move got erased, right? It's very hard for people to buy things that are extended or overbought like this. But in my opinion, it's just, you have to, at some point, like you were talking about, just bite your tongue and buy some, put out a stop loss and just kind of walk away. Because if we got this buy low, sell high mentality out of people's mind and just say, I even, when I posted my Ethereum idea here, I had a few followers saying, well, it's up a whole bunch from 1,500 to 2,000. And I'm like, yeah, that's why I'm interested in it, right? Is because it's already gotten this massive move off the bottom. If we break out of this, call it 2,100 zone, I think there's that other leg again. And it's just very, very hard. People want to buy when the market looks like this. And that's really, again, not only, let's say, for example, you have two strategies and they each perform the exact same at that, you back tested them for 40 years and each give you like a 20% year over year return with a 30% max drawdown. Like all the statistics wise are all the same. Mentally, I would still go to the trend following system because the amount of time you spend underwater when you're trying to buy dips is just so painful for me, right? With this particular trade I'm in, I'm in, and if we break under this little area, like 19,000 or so, I'm out, and then that's established. But when these things are dropping, you have no place to put a stop loss, right? So you're just kind of hoping that you're right. But yeah, if we can get this whole buy low, sell high out of the way and start getting in these trends, because as you were talking about, if these institutions are going to get in with these coins, and this is going to decentralize a lot of it, then you're going to get those headwinds, and your job then is just to hopefully be have the stoicism, I guess, to hold and kind of move on. But it's very interesting. And I've always thought one massive use for crypto that I don't know why, I know FTX tried, people haven't done yet, is the tokenization of all of these assets. So I'll be super interested to see what you come out with, because, when I buy a stock, it sits at a broker somewhere. I don't have, full control over it. I can't use it to pay for things. I can't use it to move around. And also, I when you brought up the car example, tokenizing the car, it made me think back to a hedge fund that I worked in the long time ago. And that's what the hedge fund did, is he bought and sold antique cars. And that was his entire, no, equities whatsoever. That hedge fund ended up doing amazingly, but like you talked about, he had, I think, a 4-year lockup on client funds. So you gave money.
That's what I mean.
And the idea was, when clients would come to him and say, why? He's like, well, I'm buying and selling antique cars. If you come to me and say, I need $10 million right now, I can't, right? I can't just drive it out front and put a for sale sign on it, right? Like, these things take a long time to move. But I think that would solve that tokenization if it's like this is the floating value and it's got some sort of market making capabilities around it. I think that solves a whole lot of instruments. And for me, it means more charts to go through, because if there's a floating price for something, that means I can trade it. So I'm all on board if it gives me it means I'm going to spend more time in this office looking at charts, and hey, I'm certainly okay with that.
Yeah, man. Have you watched, hold on, what was the name for the movie? With Adam Sandler. I mean, he makes funny movies. But with Adam Sandler, there was about the diamond guy. You watched it? What was it called?
I don't know which one. I've watched most of them. I'm sure I did.
You might have watched Adam Sandler. Hold on, that was a diamond movie. Uncut Gems, it's called.
Oh,
and
yes.
he was, you watched it? He played this degenerate gambler, right? Let's bet on that shit. Let's bet whatever move. Let's bet on that shit. Let's bet on that.
Hey,
so that's where we are turning. That's where we're turning.
If there's a token on anything, that means there's a price track history on anything. If I can trade it, if it's in a nice trend, just get me in. That's the one thing because I come from a lot of a traditional finance background. And when I talk to people about crypto trading, I always just say, even if one of the benefits of crypto trading, you can start with $100, right? I get a lot of my followers say, yeah, but I'm nervous about the exchange or something. I always say, get started trading for two reasons. One, it is an emerging, what I believe will be a diversified asset. And as trend followers, the success to trend following comes like what you talk about, owning strong stuff and shorting weak stuff. There will be times where it will be prudent to be long crypto. There'll be times where it'll be prudent to be short crypto and different currencies based off what's going on in the market. And then the other thing is the 24-hour nature. Everyone's afraid in our traditional stock space of, I don't want to, the market's only open 6.5 hours a day, so I have a start time and an end time. And I always just say that's going away at some point, whether it's 5 years or 10 years or next year, who knows. But at some point, everything out there will trade as crypto. So you have to get used to the ability to just put out your trade idea, right? Put out your stop limit or stop loss and all this stuff and just let everything go. And that's why I really think that people, even if you are one of those people say, I think crypto is a scam and it's all going to zero. It's like, yes, but you should still trade it because it's getting used to this 24-hour market that I believe will be everything. I think, maybe 20 years from now, everything's tokenized. So it's like, get used to it now. Because that's the way everything's going. And the other thing that I always say, and the thing I love about crypto as well, is I'm a quant trader, which means I need to get in, I need to establish my risk, my reward, everything needs to be mapped out. In the stock market, at the close of the day, as a swing trader, I'm long a bunch of stuff and short a bunch of stuff, and it's all just up in the air until the next day. With crypto, the thing I love is you don't get that, right? I own a little bit of Ethereum. I have a stop limit to buy more if we do break out here, and I have my stop loss. And what I find is it's actually more freeing than stock trading, because I'm not worried in the middle of the night or over the weekend that the CEO is going to do something and get canceled on Twitter or whatever, and it's going to gap down. My stop's going to get hit. I don't need to watch this trade anymore. It's all set up. It's all in the system. It's all good to go, and I get to go enjoy my time in the real world.
That's right, man. Listen, having about 5 minutes left before my wife kills me. Just quick shout out again to everybody who's watching and listening to this legend speak, Michael Nauss, CMT. Bro, I'm literally feeling like I'm bringing in my mind, and we are at the bar in the New York, just literally sitting with the beer and with the drinks and just literally talking markets like this. I miss it so much. Hopefully we're gonna repeat it anytime soon. Yeah. There's the CMT symposium again.
I think what they're actually doing, last I spoke with Tyler, I did a couple CMT events up here in Canada. I don't think they're doing a big, massive one anymore. I think the game plan is they're going to do many more diversified ones. So they're decentralizing, I guess, in a way where they found a lot of advantage of doing a little CMT event in Chicago and maybe another one here, another one there. But next events you end up going to, that'd be great. I knew, I reached out to you because I thought I was going to be in Dubai a couple months ago or last month, because I was going to go with the CMT as a representative to India and do a bunch of
that
there and then over to Dubai. You probably don't follow Canadian news, but then Canada and India got in this little spat and they closed down the border to Canadians. They're like the only country in the world was
What the
like, oh,
hell?
yeah. So I couldn't get a visa, so I ended up not going. But soon, hopefully,
man.
sometime next year, we're going to give that another shot. So I'm sure, and I'd love to know. So definitely, obviously, keep in touch about what events you got on the
Yeah.
go, because we have to meet up again. That was so much fun. I don't even remember a lot of the speeches at the CMT conference, but I do remember us hanging out a lot, and I definitely want more of that for sure.
That's right. That's right. I love it so much. So, Mike, we've got about 3-4 minutes left, and there are two questions that I love you to take a look at. First
Sure.
is from Alex. Good guy. Is this good time to sell GBDC before it goes to ETF and buy BDC? What'd you say?
It would all be. I haven't looked at the spread recently, but that's narrowed quite a bit, hasn't it? The discounted NAV that GBTC had for a long time. Now, the problem is when you get a question like this, it's all about what's your time frame, right? And I think that it's I think it was one of the guys from TrendSpider that said instead of we should all put in our bios our time frame so that you can just click on someone and say okay, because someone could say I'm really bearish on Ethereum here, and I go, what are you talking about? But he's trading a minute chart or something. I'm like, oh, okay, that makes sense. Or I'm really bearish on whatever. But I I think the other question has to do with why are you carrying it in the equity world versus in the crypto world? Because it's always going to be better, in my opinion, if you are okay with it, to do pure play crypto, right? Is to buy the Bitcoin and take it into a hard wallet and put it in a safety deposit, have custody and all of that yourself. But if it's for a reason like it's in a tax advantage account or something like that, well, then you can't do that. So you have to go on the ETF. My slight worry is that the ETF is going to be a short-term sell the news event. I just remember when it was crypto went when the ETF, or not the ETF, when the futures opened. That was the top of the crypto market one time.
It's 2017, yeah.
Yeah, so I'm worried
CME.
that might happen a little bit again. I don't think it'll be as extreme, but again, depends where you want to hold it. I guess is the long short of it. If I always, custody to me is always the thing, right? If
Right
you can
on.
get custody for sure.
I love it. And that's a smart, bright mind, Michael Nauss, CMT talking. And the last question from Alex as well. Very good questions. I appreciate your questions, Alex. Good guy. Do you think BTC will move up to 42K before bull pullback? Well, it's not a pullback, it's bullback. I like this. I like this version. Bullback. I love it. I'm stealing this quote from Alex. Bull pullback through to 36. So 42 before 36, or we're about to go parabolic.
Oh, well, yeah, then we're zooming in there. So no, I like we talked about, I always have to bet on the trend, right? It's just, I have to, it's, in the long run, I know whether I'm right or wrong, I have to bet on the trend. It's going to make me, even with the lower win rate, it's going to make me more money in the long run. So I definitely think we see 42 before we see 36. Now, if we got back into 36, then I think you're still, I'm just looking at the chart here. You have this low right here and you have this low right here. That may be a load up period, right? Where if we're holding these zones, that's what I'm interested in. My very simple technical analysis, I always say, okay, who took control and when? Pulled into 36, you had this massive green candle. So some huge buyer happened there on that day. You pulled into 36 again, you had another massive candle. So the market has showed us that there is a lot of interest at this price. So I'm going to bet 42, but I think if it gets 36, I will definitely be watching it on a short-term time frame. If that support holds, I think that might be a really good place to take a shot against.
Oh man, such a wealth of knowledge, everybody. And this is Michael Nauss, CMT, and Kaya as well, which is, could you remind real quick for everybody what Kaya means?
Chartered Alternative Investment Analyst. So it's essentially anything that's not traditional stocks. So crypto counts, but private equity, real estate, hedge funds, the weird stuff.
TLDR, too long didn't read version for us is that Michael Nauss is a super smart guy, as you've clearly seen, pointing out so many of the incredible talents that this gentleman has. such an excellent, beautiful Canadian soul and smart mind that I really look up to as a friend, and it literally feels like, like a friendly chat, bro. Like, this is so awesome that you and
This
I
is
can
awesome, yeah.
talk like this. And I appreciate your time. And we've spent a good portion of time, almost, well, actually, clock is ticking 1 hour. And this is huge appreciation. So do please make sure, if you're watching that and listening, wherever you're watching that, whichever part of the world, you want to have Michael Nauss CMT on your list, on your Twitter follow, on your X following page. So all you think to do, just press on this tiny little, well, not that tiny anymore, following button. I'm following Michael already. So if you're not following Michael, just make sure you smash this button for Michael. Let's help him break 8,000 followers. That's going to be a good milestone to celebrate. Yes. That's it. So let's push. Michael Nauss CMT. That's the handle. And just like Mike said, plenty of very wise comments. He posts excellent stuff on Twitter, as well as for stats@trading.com. So I do advise, well, not financial advice. I still do recommend so that you actually just check whatever Michael does and puts out, because it's incredible quality. And before we run, I also promised to show real quick the actual. Hold on, it's gonna be here. Fulcrum, right? By the way, Michael, if you want, I can connect you with them. Right, they're really cool guys. They may need also some smart people to recommend some stuff around them, especially CMTs. So I can easily. We were yesterday at the TV, by the way, so we can talk. And this is inflation-resistant stablecoin for digital nomads, and at the same time, it's a Swiss-based, fully regulated TradFi asset managers, RWA secure DeFi protocol for professional entities. All that means is it's a fairly good brand. And tokenizing stuff. Listen, if there's one thing that we could tokenize, if you ever tokenize your brain, man, talk to me. I want to share that.
Okay. I don't know. It might be as short as that new child arrives. It might be as short because I won't be able to think anymore.
Infinite long, 100x, bro. Listen, I appreciate your time. Thanks for sharing all your wisdom.
Anytime. Like you said, this was just two buds hanging out. I had a lot of fun. Anytime you want to chat, you've got my number, my friend. And I wish you well and good health, and to everyone watching and their families, all the best, right?
That's right. So before we go, I'll make sure to put Michael's number in this. No, I'm kidding. No, I'm kidding. Stay safe, my brother. Okay, take care, bro.
Talk to you soon.
Thank you, everybody, for tuning in. I've been your host, Adrian Zduńczyk, CMT Charter Market Technician, and I'm out before my wife kills me. God bless you all. Bye-bye.